You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tusaw from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster Giovinazzi from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means it is time once again to kick off the whole shebang, commence our broadcast week here on the old Options Insider Radio Network with the one, the only, the Option Block, your bi-weekly source for all things options related. I will be your host for a good rash of the programming here this week. Not all of it, thankfully. I got a lot of things to do, so I've been talking on the microphones, but every now and then I get lured to the dark side, like here on the Option Block. A couple of times a week, every Monday and Thursday, noon Central, 1 p.m. Eastern. You can catch us, of course, live by the Mixler link if you are so inclined. All of our programs that are live, including we'll have boot camp this week and a bunch of other fun stuff, will all be via that same Mixler link. So you can grab it once, set it and forget it. If you want to know when we go live for all of our shows, hit the website, or you can just follow us on Mixler. You get notified when all of our shows go live. There are some surprises always mixed in there during the weeks as well. So look forward to that. And of course, keep those questions, those comments coming, and keep those reviews coming on your platform of choice if you like what you hear. That helps new people continue to discover not just the Option Block, but the whole darn network out there. Records pretty much every month for 2020 out there. Not the best environment for it, but hey, we're glad to see people are discovering the content out there. We'll endeavor to keep you informed, educated, maybe a little bit entertained out there as well. We'll do our best. At the very least, we'll give you a whole bunch of content to sink your teeth into. And let's see, joining me on the old program today to help keep the content fire hose coming. First, let's go out someday to Austin, but right now to the hinterlands of Chicago, where we are joined once again by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com by way of Carmen Line Capital. Mr. Meatball, welcome back to the program, sir.
Hey, it's good to see you. Good to be here. What a day. What a wonderful day to be alive.
I was just going to say that. What a day to be alive. What a day. Every day so far in 2020, what a day to be alive. I've said that every morning. Good stuff. Good times abound. And, if we're talking optimism and overall happiness, then we got to be talking about the uncleest of Mikes, Mr. Uncle Mike Tusaw from St. Charles Wealth Management. Uncle Mike, welcome back to the program to you as well, sir.
Hey, it is a great day to be alive, and I want to give a shout-out to my old high school football coach, Wendell Jeffries, because that's what he said pretty much every day before practice. Great day to be alive, boys. Great day to be alive. So bringing back some old high school football memories and the absence of football in general. So happy to be alive.
Great day to be alive. Now go run some laps. Do some push-ups. Celebrate that life.
Yes, sir.
Celebrate that life with extensive physical activity as we head right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for The Trading Block.
All right, listeners, rinse and repeat, set it and forget it, kick off to another week, and we're whistling past that graveyard yet again, strong and hard. Not looking behind us, whistling pretty loud out here. Most of the major indices firmly in the green today. S&P actually the laggard of the bunch, even though ever so slightly. It's up about 0.75 of a percentage point. The Dow just edging it out to the north there, up about 0.8 of a percentage point. And the NASDAQ just saying, the heck with both of you. We're going to go up almost 1.5%. NASDAQ pretty much at new all-time highs. So the tech-heavy NASDAQ has said the heck with everything that's gone on in 2020. We're off to the races, full steam ahead. Let's keep rolling out there. So, yeah, it's an interesting start to the week yet again. We're seeing, once again, interesting mixed messages. So it's interesting to see what the market is picking up on. So we've seen, of course, growing issues with the pandemic, growing lockdowns. An analyst coming out, I believe this was the head of quant research over there at SocGen over the weekend, saying he foresees potential of multiple decades of deleterious economic after effects as a result of this pandemic. So he's putting that in analyst speak. But the short story is that's not good. Of course, we take a dim view of analysts here. And clearly the market does as well today because it's feeling the love. Despite the fact that coming into this week, people thought, or were hoping at least, we'd have some sort of deal on a new stimulus package. Yet not the case. The hanging point, the sticking point still seems to be around that extra 600 or so for the unemployment benefits. A lot of Democrats want to keep it. A lot of Republicans think it's providing an incentive not to go back to work, hence the deadlock there. But if you want data, there is some good data out there, which is probably adding a little bit of fuel to the upside fires out there today. Stronger than expected manufacturing numbers coming in. The ISM, of course, the Institute for Supply Management out there, reporting that its manufacturing gauge jumping up is hit a 54.2 and new orders hitting a 61.5. To give you some frame of reference, analysts had expected a 53.6 on the overall index. And so an increase shows a gain, an increase in factory and manufacturing activity, which is a good thing. Whether that's sustainable now that we're seeing lockdowns, who knows? That's up for debate. But clearly the market liking what it's seeing out there. So once again, a bit of selective data. But hey, if you're in the bullish camp, you're liking it out there. Coming into showtime, we had our old friend, the VIX Cash, vacillating between about 24.5 and 24.75 on the latter portion of that tip right now. It puts it down still from our last show, about 1.5 points. Our old friend, the VVIX, shy of that 120 level now, down to about 112.75 or so. That puts it down almost 5 handles, about 4.75 points from our last show on Thursday. And our old friend, VXX, coming into showtime was down a wee bit, down shy of that 30 handle. So that our friend out there, that 30-22 put spread for size, he's probably a happier camper right now than he has been of late. It was hitting a 28.5, and it's a little bit shy of that right now, about 28.44 or so. So that puts it down almost 1.5 points from our last show. So there we go. The table is set. It is time to dive in. Let's start in the optimistic camp. Let's start with Uncle Mike. Uncle Mike, I buried the lead out there because not only is NASDAQ at all-time highs, so it's not S&P, but you still get to say you're saying if you want, but also you missed the boat over the weekend here. You had your chance, sir. When I saw the XFL got scooped up for a meager $15 million, I assumed it was Uncle Mike and St. Charles Wealth Management behind that bid, but nay, it was The Rock, sir. How did you let The Rock beat you to that punch, Uncle Mike?
Well, me and The Rock go way back, and so I told him that I wanted to I didn't really want to get into it because I didn't want to take focus away from my option trading. So I told him that he could have it, and then he agreed that he'd let me give him the people's elbow as kind of a just to be nice. So we got a good me and The Rock, we're really tight like that.
It's a fair trade.
So, and then, so, I mean, with that, he is going to let me come out to some games and say, do you smell what The Rock's cooking? He's going to let me do a few of those things. So we worked it out. Me and The Rock, we go way back. So we're good. So anyway, with the markets today, I think that the big thing that's lighting up my tape is this fruit company again. I mean, it almost feels like it's still – Apple does not have the innovation that had back in the early days of this show, to me, of world-changing innovation like they did back then. But holy cow, this stock price just continues to move and move and move and move and move. I remember just, for those of us, the longtime listeners, I would always say how I was in Apple, was rolling up my calls on Apple or whatever I was doing with it. Mark and Mark would make fun of me. And my response would be, well, they'd say, why are you so bullish on Apple? And my response would always be, well, it's Apple. And so now through the years, I'm like, okay, I took profits on it. That was a story that really built up my business a lot many years ago. But it's like it's continuing to just be Apple. So this is craziness indeed that it is going up as quickly and as fast as it is. But definitely fun to watch and reminiscent of the old days of the show when Mark and Mark would make fun of me for Apple all the time. But that's one thing that's lighting up my tape. And I think that the big thing with which people are going to be watching this week, of course, non-farm coming out at the end of the week, but the big thing is going to be what we're going to do with the unemployment benefit. Right now, you can make a case that it's incentivizing people to not work. But if people don't have that money, the other side of that is that people don't have money to spend, and then people can't buy the same things with which they were before, or go places where they may or may not have been able to go before based upon their proximity. So I don't think that lowering the $600 amount would be good for the market. I don't think it would be. I do think it would be good for our country, quite frankly, because I do think it would incentivize people to work. But I don't think it would be a bullish thing for our stock market, if that's what you're looking at. So that's one thing. Of course, the numbers with COVID and everything that's happening. But the main thing the two main things that I look at with the whole COVID thing is, number one, is this disease as deadly as it was a few months ago? And that's debatable through the numbers. And I don't really want to parse all that right now. Now's not the time or place for that. But is this as deadly as it was? Is this something that it's going to have permanent damage to people? Is this as bad of a thing as it was? Or is the COVID, is it starting to die out, become less effective? I personally, I don't like getting my news from major news sources on this. Where I'll be honest with you, where I like to try to get my news is I've been very blessed to have a lot of doctors as clients, and I try and get my news from frontline people. And by doing that, I feel that's one of the only ways I can really get the facts on it. And so, one of the things that's good about this is that we do have all resources we possibly can right now as a country and as a world, quite frankly, trying to find a cure or a vaccine to COVID. But on the flip side, I had a doctor point something out to me recently. He's like, even if we have a vaccine for it, we still don't get the flu vaccine is never perfect every year. And just because you can't predict a virus. And so even if we have a vaccine, because it's a virus, it might not be the vaccine we need to totally take care of it every year, because the virus might mutate even more. So I think there's a lot of uncertainty. And the bottom line is that I'm going to go back to what I go to all the time on this show with my optimism of this market, is that we've been through all of this before in some way, shape, or form as a country. We've been through 2 world wars. We've been through global pandemics. We've been through a lot of these things. And the United States of America keeps on going. And so with that, I think there is reason to be optimistic. But on the flip side, the other awesome benefit that we offer as a nation is options. So if you want to protect yourself in case I'm wrong, and in case I'm overly optimistic, and in case I am just a total pinhead to think that I should be optimistic in the United States, if you disagree with me, buy put options. It's a wonderful thing. Or let's say that you're kind of cautious about this, which is my stance on it, and you need to have something in place in case you're wrong, then you can do a whole variety of option strategies. So that is what's lighting up my tape, and that is what I am seeing today. Mark, do you smell what I'm cooking?
I do. I smell it. I smell it indeed. It's tasty. A little bit of a rack of lamb. Leave off the mint jelly, though. I'm not a fan of the mint jelly, but other things going on out there in Uncle Mike Land. I'll have to come out for dinner. It smells pretty good over here. Let's see if the greasiest of meatballs can compete with his own delicious smells. Mr. Meatball, sir, what are you cooking up over there?
I mean, is anybody surprised that The Rock bought the XFL? I think everything the guy touches is gold. The nice thing is this will go really well with his Ballers TV show storyline, and it almost makes more sense than a Baller show. You know, it's another market. Apple, the PE is now 32. I mean, do you remember a couple of years ago we would lament how low the PE was on it? It's now 32. These names, these tech names that everybody's piling in, are developing a bigger and bigger and bigger PE, a bigger footprint on the market. And, you know, it is something that we've never seen in terms of concentration of risk in the overall market. And that is what is probably the biggest risk to the market right now, is how concentrated all of the dollars are. And that's what I'm paying attention to. We got some more earnings. We have people arguing about the unemployment benefits. Should it be replacement or direct payment? Should it be six of something or half dozen of something? Is essentially what they're arguing over. They're arguing over semantics, but that is the way that the world works, apparently. So that has been the big news. I'll be interested to see what happens there, and then I think that I think the big news is Apple getting big fall through. Amazon, not so much. Amazon is a nice day. It's off a little bit. So that's interesting, I think.
Yeah, Apple's certainly on fire out there today. Folks liking the notion of a bit of a split. Also, apparently can't buy enough iPhones out there. Stocks at almost 437 right now, up nearly 12 handles or nearly 3% today. So almost doubling the already over-the-top NASDAQ move going up out there. So Apple doing a little bit of paper out there. I'll just give you a spoiler. I'll drop that hint for you right now as we break down what's lighting up the tapes out there collectively. Let's start in index land. VIX, not really feeling its oats out there today, doing about what you'd expect right about now, about 123,000 contracts, so right around a third of its ADV right now. SPY closing in on 2 million contracts, not quite there yet, about 1.8 million, which puts it not even half of its ADV, which is just a tick under 4 million. The S, 624,000, the ADV, 934. So the S closing in on its dramatically decreased ADV out there. The S should be doing well north of 1 million contracts a day, but c'est la vie, that's where we find ourselves out there today. The Q, 674,000 contracts on the tape as of a few minutes ago. The ADV, 1.11 million, and IWM at about 224,000 contracts. The ADV, just a tick north of 500,000, 527,000 out there. Let's move on to the single names. Cost you 174,000 to break into the top 10 today. That gets you all the way to Intel, number 10. Number 9, Tesla. Oh, the mighty have fallen. What a crazy day that Tesla is not somewhere in the top 5. It's all the way down at the number 9 with 184,000 contracts. Number 8 is a newcomer to the top 10. This is DXC Technologies doing 188,000 contracts. This is an American B2B IT company. So there you go. A lot of acronym soup in that name. By the way, if you're wondering, their ADV is 11,000 contracts. So they're doing a little bit of paper right now. And this paper, ironically enough, of that 188,000, it's exactly 50-50 calls to puts out there, 94,000 each. Interesting stuff. They got some earnings coming up. Doesn't seem like that paper is too biased in either direction, which is interesting. Just a heck of a lot of flow out there. Number 7, AMD, 192,000. You know the story with them by now. Number 6, our friends across the street, Boeing, 205. Nowhere to be seen. Their symbol twin, Bank of America, not there. Usually they're neck and neck with each other. Number 5, Snap, 214,000. Number 4, APA. This is another newcomer here to our top 10. Interesting to see some new names. Well, actually, maybe not. We talked about them before, but it's been a while. This is Apache out there. They're in the hydrocarbon exploration. Oh, it sounds so grandiose for oil digging, oil drilling out there. Let's see. They are at 243,000 contracts. So number 4. Number 3, our old friend Neo, topping out Tesla today. That's kind of interesting. 283,000. Number 2, get this, Microsoft, 735,000. You know why they're moving today. They're, of course, in talks to gobble up the U.S. remnants there of TikTok after there's been a lot of talk of banning that. It was on again, then it's off again, then it's on again. It seems like one of those interesting will they, won't they kind of deals. Either way, folks liking that, its impact on the stock. Because Microsoft did such a great job with Skype. How could they screw up TikTok? But apparently the market likes this one. Microsoft's up almost 10 handles, about almost 5%, set about 214, almost 215 out there right now, doing 735,000 contracts. That's usually it. That's usually more than enough. That's usually probably 2x our number one spot, but not today, listeners. Interesting day, because number one, I kind of spoiled it earlier. It's Apple. I think the technical term is blowing the freaking doors off. Apple's usually good for 350, 400, maybe a good day, 500K. If you're getting really up there, 700,000 like Microsoft, maybe threatening 1 million today already, 1.12 million contracts on the tape in Apple land. Apple, people always talk about it as this great manufacturing story, it's great product design story, all these other things, and people love it. Great marketing story, surely, but I think the impact it's had on the brokerage space is less heralded. Without Apple, where would the brokerage business have been for the last decade or so? It's pretty much all you guys trade out there, and clearly that's the case up there today. 1.12 million, 70% of that coming on the call side. Just in calls alone, they've done 781,000 contract, which is more than enough for number one, just on calls. Forget the puts. Who buys a put on Apple? How dare you? So, yeah, crazy stuff out there. Let's see. Our most biased paper is actually, looks like Microsoft, 81% of it coming on the call side of the ledger. Fascinating stuff out here. Let's talk about what's lighting it up on a more micro individual name perspective. Earnings. Today we had Clorox. A lot of people looking at Clorox. Apparently the numbers weren't great. I guess everyone was expecting everyone and their mother to buy Clorox wipes, and apparently not everyone did, because the stock was off about 3% coming out of there. They had better than expected earnings, but I guess, people always want more. It's what have you done for me lately? And apparently it wasn't enough. So Clorox reporting today. Tyson Foods, they caused a bit of a stir earlier with all their dire warnings about food supply. Turned out maybe not so much the case. Turned out they were exporting food while all this stuff was going on about them, stirring up concerns about our domestic food supply. So a lot of interesting stuff afoot there. Marathon Petroleum as well out there. They're making news because they sold a bunch of their Speedway gas stations to 7-Eleven. So now you're going to be able to go to a 7-Eleven gas station. So there you go. Interesting news. Take-Two over there on the game development and publishing side. And Chegg, C-H-E-G-G. Looks like an online education company here. Tomorrow we got the old Disney out there, Wynn Resorts, Beyond Meat. A lot of people have been watching them of late as a bit of a bellwether for what's going on, food supply and meat demand-wise. We got British Petroleum, Fox Corp. They may be coming back in a little bit, so pay attention to that one. We got Moderna on Wednesday. A lot of eyes on that one. CVS as well, Humana, Square, and Roku, and Etsy on Wednesday. Thursday, we got the old Ubers. Interesting times for ride sharing out there right now. Dropbox and Papa John's. Let's see. We got it for you, listeners. We got the hot updated earnings move results reports, and the earnings season reports. You know where to go for all that good stuff. TheOptionsInsider.com. Let's see what we've got. Let's go to, we got Chegg, a name I'm familiar with, ticker symbol CHGG. They're popping off after the bell today. They come into this report, they were almost $81. And let's see, in the past, they've moved $9.31. Right now, they're pricing in $12.71. So they're pricing in a little bit of get up and go out there in Chegg. Not the case in Take-Two. Take-Two is at $164, almost even. In the past, they've moved $12.64. Right now, they're pricing in a little bit shy of $12, $11.96. So maybe things a little bit quieter in Take-Two. They're after the bell today as well. Beyond Meat after the bell tomorrow. They were at $125.90 as of this report. In the past, they've moved, get this, listeners, $29.07. Obviously, a little bit of a shorter time horizon in terms of data available on Beyond Meat, but still, in the limited time frame that we have, it's averaged out to $29. Right now, they're pricing in $17.19. Interesting. Out there, Disney, a big name. A lot of people are watching out there right now. They're closing in on $117 as of the time of this report. In the past, they've moved $2.57, so not a heck of a lot, given all the drama that's gone on out there, closing parks and Disney Plus and streaming and bumping movies. A lot of drama on their front, yet not a lot of vol. This time, they're pricing in a little bit more, to the tune of $5.33. So over 2x what their average is out there. So maybe interesting times afoot coming in for Disney. They're on the 4th after the bell. Fox Corp, Class A, they're on the 4th as well. 25.77 is where they were. They were pricing in $1.61 in the past. They've moved 61 cents. So juicy in Fox Corp. I think we'll come back to that in a few minutes. CVS as well. A lot of people going there for testing and everything else out there right now. 62, almost $63 as of the time of this report. And then in the past, they moved 262 and they're pricing in 261 right now. So it's like they're pricing in earnings. It's kind of a bit of a non-event. Moderna here, they're on the 5th before the bell. 74.10 is where they were trading at the time. In the past, they moved $2.22. Right now, they're pricing in a whopping $6.13. If you're looking for a place for some juice, Moderna might be your huckleberry. Let's see. Etsy, the 5th after the bell, 118.38. In the past, they've moved $13.48. This time, they're pricing in $15.38. So a little bit of extra juice. Let's get a couple more. Then we'll head on into your oddness here. Roku, 154.89. In the past, they've moved, get this, $31.32. So we know Roku's been a favorite in our top 10 and our most actives. It's usually lighting up the options paper and delivering some vol of late. This time, though, they're saying things might be a little bit more tranquil in the set-top box front because they're only pricing in $19.73. That's quite a discount from a vol perspective. And then Square, of course, online payments app there, almost $130, $129.85 as of this report. They, in the past, have moved $7.55. Right now, they're closing in on $12 from a straddle. They're pricing in $11.79. So pricing in a little bit of juice there. They are the 5th after the bell. That's just a taste, just a hint, listeners. Let's do a couple. Let's do Uber. Why not? August 6th after the bell. They were at $30.25 pretty much. In the past, they've moved $2.35. Right now, $2.28. So also pricing in a bit of maybe a non-event from an overall earnings perspective out there. So interesting stuff afoot. You can check out all that for yourselves, listeners, as we head on into. We'll do one more. Let's mix up the genres a bit. Let's head on out to pizza. Ticker symbol PZZA, which is a Papa John's out there. Timeless report, they were trading $94.67. In the past, they've moved $4.57. Right now, they're pricing in a whopping $7.14. That's some tasty pizza vol out there, listeners. That's just the taste, pun intended, of the many tickers that are available for you. Find the full list for yourselves. Maybe there's a name we didn't list. Chances are there are, because there's quite a few of them here. Head on over to theoptionsinsider.com to get your fix. Meanwhile, it's time to get your fix of a little bit of weirdness, a little bit of wildness. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, you know what time it is. Time to get weird. Time to get wild. Time for the Odd Block. Going to kick things off, actually looking back a little bit to our last show and last week in general. There was a lot of hand-wringing, a lot of brouhaha over what the heck was going on out there in Kodak, easy for me to say. Kodak, thinking of MODOK maybe from the Marvel Universe out there. That would be fun. That's just another show for another day. Of course, Kodak making headlines last week because effectively through the Defense Production Act, they were transformed almost overnight into a pharmaceutical manufacturing entity. And the market liked that to the tune of a huge pop. They went from a couple of bucks all the way up. What was their high? 60 even. They hit 60 even on, let's see. Well, they hit 33.20 on the 29th. And it says here a 52-week high was 60. Maybe that must have been intraday here because they got up to, looks like the topped out 46.03 on Wednesday over there. So clearly a wee bit higher than $2 and then drifted off. That, of course, prompted a lot of you to speculate, hey, what was up with this? Was there any information leakage? Did you see any weird trades? And we parsed the listed flow on Monday and Tuesday, and it really didn't seem like that's when you expect that kind of flow to come in, particularly Monday. If someone knows about this in advance, they're going to hit that stuff then. And it didn't seem like on the listed front there was really anything that didn't pass the smell test. There were a couple of scoops on the upside on the OC5 strike. Someone picked up a couple of hundred of those. So that made roughly $750,000. So you could certainly maybe look into those because those seem like a pretty aggressive call buy at the time. But outside of that, a couple of hundred lots here or there, there wasn't the kind of paper you might expect if this had really gotten out onto the street early. We've all been out there. We've seen it in the past. I've seen it when cabinet ministers and secretaries of defense and treasury all step down unexpectedly. All the flow that can come in is it leaks to the House staffers and it leaks to everyone else and it leaks to the bank and all these other types of deals. Usually they leak. And yet this one seems like it was pretty buttoned up. And we mentioned that on the show. And a lot of you chimed in with what the CEO had done on the equity side. And we mentioned that on the show. So we did talk about that. That certainly didn't seem well formed. But he also had our consumer chiming in saying, check out the Form 4 transactions. He says there were significant options acquired by insiders on Monday before the news. So we did that. These are obviously not listed. So this is a little bit of a different type of option we're talking about here. These are kind of the corporate options grants. So you're not going to see, you're looking up on your various brokerage analytics platforms out there. And sure enough, he was correct. Looking here on this, on the Form 4, which shows the different types of grants awarded out there. There's a lot of underlying change in hands and also a fair amount of options being awarded on the 27th. So interesting timing to these. A lot of these to this James Continenza, who is the CEO. He had options effectively for 170,000 shares at a strike price of $12. So that was pretty far out of the money. Of course, it became in the money. $6 as well. He got equivalent of almost 300,000 shares for $6.03, and another almost 300,000 shares for $4.53. And then a huge block of nearly 1 million shares, 981,000, with a strike price of $3.03 out there. Also had other people like the CFO getting blocks of 10,000 at the exact same prices here, $12, $6.03, $4.53, and $3.03. So at the time they were awarded on Monday, not the best strikes because they were all pretty far out of the money. Now, worth noting, these expire, I believe, in 2026 or something ridiculous like that. But still, it was enough to maybe raise the hairs on your back of your neck and not perhaps pass the smell test. Kodak, of course, put out some information on this. They said these options were previously reported by our CEO, and the Form 4 is being amended on Monday. So instead, it was just amended to provide greater detail on the terms of these options trades. They say it was as a result of a 5% secured convertible note that he issued that's due in 2021. As a result of that, if that is converted into equity, they say he would have been diluted and all these other shareholders would have been diluted. So they granted these options as a way to amend them, make them good in case they are diluted. The timing of that amending on the 27th, certainly suspect. Certainly not good from a PR perspective. But, these companies always bend over backwards to try to justify these things, and I expected something like that. Either way, though, this one certainly does smell a little weird. Mr. Meatball, what are your thoughts here on the CEO and a bunch of other top executives in Kodak getting nice options packages amended for them right before this deal was announced, sir?
I mean, I don't know how ethical that is. It's a little strange, don't you think? But that being said, I don't know. How much was the guy making at Kodak before he, they got this deal? But it's just amazing how companies can transform themselves. Think about like Corning, right? Corning at one point in time made, baking dishes. They don't do that anymore either. So it's funny, but, interesting. If this works out in 50 years or 20 years, people go, wait, Kodak used to do what? That, which is funny. But if you look at where the camera industry was going, even a company like GoPro can't, that's at the cutting edge of camera work, can't get any real traction. So I think that it was more for go home for Kodak. I just don't know about these exact. I'm not surprised. That's very executive-y of them to do for themselves. So if you're mad, you get mad at the board, not at the executives themselves. Someone offers you free money, you take it.
Yeah, it's funny. We have kind of detailed the death spiral of Kodak on this show now. The show's been running long enough to detail it multiple times. They've had multiple transitions. First, of course, the death spiral of actual film processing, which resulted in them going the way of the dodo. And then coming back, it seemed like Beyond and others, these, Overstock it is anyway, that kind of pivoting into the crypto space. I'm like, that might be the salvation of Kodak. Not so much. And then lo and behold, this immediate transformation and now these awarding of shares. People are always asking us, hey, do you think something's going to happen as a result of this prosecutions? I do not. They obviously have a clear paper trail. They've done the old corporate CYA on this front. It's not a good look. It certainly doesn't look publicly. And Meatball is right. These guys are getting handed money. It's the board. Of course, it doesn't help that these guys are usually, this guy's the chairman of his own board. So I always find that a little bit dubious to combine those two roles. Chairman should have a little bit of oversight over the CEO. Shouldn't be the same guy usually, but c'est la vie. It's not how it always shakes out there. So they got handed a lot of money. Granted, they didn't get handed as much money as it was last week. The stock has given up pretty much most of that. It was hit, we said 46 and change. Now it's down to 16.27 as of a few minutes ago, down another 5.5 or down about 25.5% today. So they're closing in on that 12 strike. Give them maybe another session or so, and those $12 calls will be out of the money again. So that will at least diminish some of the value of that package. It'll be interesting to see if they immediately try to do some other activity against this, either hedging or what else. That would add to the high dubious not passing the smell factor. But for now, at least, I think they've probably done enough CYA to keep this guy from doing the perp walk that I know so many of you out there judging from your conversations clearly want. But we'll keep an eye on this, and maybe some other shoes will watch to let this guy skate and all these other guys skate, and they'll go out and get that guy who got the 200 lot on the hot calls. They'll put that guy in chains, make him do the perp walk. Meanwhile, this guy will skate on hundreds of thousands of contracts equivalently out here. That's the game we're playing out here, listeners. If it sounds defeatist, yeah, I've seen this dance too many times, unfortunately. In the beginning, I was like you guys, oh my God, this is clearly dubious. The first time a Goldman customer came in and picked me off for calls right before the bell at the end of the day, and the stock's doing nothing. And then sure enough, they upgrade the stock in the after hours, and then before even the bell, another Goldman customer comes in and dumps it to you. First time that happens to you, you get outraged. 700th time, kind of develop a bit of a thinner, or I should say a thicker skin to all this madness out here. Let's move on to another name that we talked about earlier, but other than that, we haven't really talked about in quite some time. This is Fox Corp Class A. You know what Fox Corp does. The media moguls, the family behind, of course, the inspiration for all that Succession, all the other drama out there. The show I haven't watched, but I've heard good things about it. I just hadn't felt like watching a dramatization of the Murdoch family, so I haven't really gotten into it. But Fox Corp looking pretty good today. 26.16 up 40 cents. Ticker symbol Fox A, of course, for Class A shares. This thing has had an interesting run. A year ago, they were trading $36, so about $10 north of where they are right now. Then they kind of sold off a bit down to 30.5 in October. Then they rallied again. They got up to their pretty much 52-week high of just a tick under $40. You know when that was, listeners? Right before all this fun. Right in mid-February, they hit that level, and then they pretty much sold off hard. They got down to their low about a little bit shy of $20, $19.81 back in March, and they kind of rebounded pretty quickly. Within a week or so, they were trading about 25, and then by June 8th, they got up to 32.5, which is where a lot of these names topped out. I've lost track of how many names we've analyzed here where they had their run-up that peaked out and kind of petered out on June 8th. That was the day for a lot of these names. And then this one, same thing, followed suit. And now, unlike the tech-heavy names that have pretty much continued their upward momentum, this one actually gave a lot of it back. It was 24.30 by July 9th. So a month later, it had given up pretty much almost 10 handles. And then right now, we're hovering down about 8 or so points, down to about 26.15 to where we find ourselves today. Let's see what our Eye of Sauron dug up out here. Looks like it's some put paper. In particular, it's the AUG 20. These are expiring on the 28th. So these are out there in the weeklies. 21 strike puts going up for 21 cents. How many 20s can we throw into this sentence? The market was 15 cents at 31. So leaning towards the bid, bit of a wide market out there, but not as bad as some of the other ones we talked about last week where they had no bid. I think the market was no bid at 40 cents. So this is a little bit better than that. This one up over there on the Philly. This is clearly opening. Worth noting, they have earnings tomorrow. We just talked about them earlier. So these are 18% out of the money puts Mr. Meatball, in a name that has earnings after the bell tomorrow. Interesting, they went out into the weeklies because they could have just gotten the standard contract if they wanted to just get some weekly premium. But c'est la vie. Interesting choice. Mr. Meatball, what are your thoughts here? You think our friend is buying these puts? Think he's drawn a line in the sand ahead of the earnings? What are your thoughts here on these Fox Corp Class A puts?
Yeah, it's interesting. A lot of news over the weekend. A lot going on with Fox Corp. They're under kind of an assault. So I could go either way on these. Is it somebody trying to buy the stock, or, is it somebody who's already long protecting themselves? If you look at, how it's acting on the news from today, it might be somebody just drawing a line in the sand because, it's not insanely expensive right now. I've seen it much cheaper over the last, much more expensive over the last 3 months. This was almost a $35 stock in June. So my guess is that this is a bit of a line in the sand, because we're not too far off from the 6-month low or even the year low here.
Does have a bit of that whiff about it. So tell you what, we shall return to our friends out here in Fox Corp. Meanwhile, though, we're going to return to a name we just talked about not that long ago, back in late June 22nd to be precise. We talked about what we termed at the time a bit of a train trade, and you don't want to be the first name on that train. It seemed like our friend here was. This was, let's see, calls in Fortuna Silver Mine, ticker symbol FSM. At the time, he profiled the 2000 lot of the July 5 calls going up for 15 cents. The market was a dime at 15. Someone took all of them out for 15 cents and then said, how are they now? Which is hence the train, because 40,000 of them went up on the day. So this first 2000 lot, maybe this guy had a bit of an ouchie at the end of all that. That's one thing you don't want to hear. You put up some size and name, doesn't trade a lot, and all. So I say, how are they now? And then you kind of get that cold sweat on your back. You say, wait a minute, what did I just do? What did I just step in front of? So 40,000 of these bad boys traded for different prices. Worth noting, the OI only changed by about 20,000 contracts. So a lot of churn and burn on the strike that day. Only about 20,000 net new positionings. A lot of back and forth on that day. At the time, the stock closed at $4.63 back on June 22nd. And this guy was picking up, like we said, the 5 calls for 15 cents. Like I said, 40,000 of these things traded throughout the day for higher levels than that. But that's the print we were watching. And let's see, they traded interesting things since then. Looks like this guy probably net did all right, because the stock went out at $5.20 on expiration. So just from your straight expiration math, this guy should have done all right. But it looks like these things continued to trade pretty actively. Another 6,000 traded the day after we profiled it on the 23rd. These things were pretty hot. 3,400 on the 24th, and then 1,500 again, all the way out to another big day on the 17th, which was, of course, right around expiration. They did another 4,300. Worth noting, at the time of expiration, it seems like a chunk of them had already been closed. So this guy took off. You're going to see 42,000 trading and 20,000 OI. You're going to see some of that pare down. By the time he got close to expiration, that OI had dropped to around 12,000 or so. So it seemed like a good chunk of them came off the tape, and then the rest went out on expiration. Not that many, only about 4,300 volume, and the OI was actually, there was still about 12,000 and change on expiration. So that's kind of interesting for an option that was kind of in the money. Maybe this guy wanted to pick up the stock. Either way, the price he paid for is right around where it was at expirations. Maybe he felt it was kind of a de minimis thing, just keep him on, get the stock, and go from there. Either way, a bit of a weird one, Mr. Meatball, but it seems like this guy did all right. Let's see, what was the high of this name during the time of this trade here? Maybe we can see. Yeah, the high was pretty much hit much higher levels now. It's at 656 now, so hit much higher levels after expiration. Unfortunately, that doesn't help our friend here. So the high was pretty much right around expiration day, 520 or so. So that didn't really help. If he had a nice little spike earlier, maybe he could have dumped more of them then. But these things were pretty active. It seems like they got out of some, if not all of them, Mr. Meatball, right before expiration, and the remainder kind of went out with about 20 cents worth of juice on them. Is that your take here as well, Mr. Meatball? The guy probably did all right, but a bit of a weird trade nonetheless?
Yeah, that's pretty much what it looks like. With the activity, I was expecting a little bit more out of this thing, and it just did not come together.
And this is a good frame of reference example, listeners, because these guys were right, but they were about a month off in terms of where this thing was really going to explode. So you put them all on for July, you got to have it happen by July. And unfortunately, it just started happening right when expiration hits. So unfortunately for this trade, could have done a lot better. Probably did all right. They left a surprising number open, which is a little bit weird. Usually you got these calls open, stocks moving your way. You're going to dump them out to at least close it out if you don't want to pick up the stock, and also at least scratch your trade. And they apparently did that for some of them, but not all of them. Meanwhile, though, it's Monday. It's Uncle Mike time. It is time for the Strategy Block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, Uncle Mike, it's your day. It's Monday. It's strategery time. We're threatening new all-time highs in various indices. So it's an Uncle Mike kind of day. What do you got in store for us today, sir?
Let's talk about box spreads. I mean, what can possibly be more exciting than a box spread?
Super sexy. I joke about that, but people are apparently all up in arms in the Twitter about box spreads, sir. So have at it.
Okay, so what I want to go through today is let's talk about day trading. If I were to buy a call and sell a call on the same day, and if my account is less than $25,000, and I do that 4 times within a 5 business day period, then I am going to be flagged as what's called a pattern day trader. Now, of course, none of this applies if you're doing futures or futures options. This is just if you're doing equities and equity options. So let's say that I'm doing a spread. I'm doing just a regular call spread. I buy the 50-55 call spread and I sell it the same day because either it went against me or I'm taking profits, whatever the case may be. And I do that, I'm flagged that counts as 2 trades. So let's say I'm doing a 4-legged iron condor. I get into it during the day and market just goes way against me during that day. And I got to get out of this thing right away. And I get out of all 4 legs. That's 4 day trades in one day, even though it was just 1 trade. So what if your account is over $25,000, who cares? But I have some clients that have their accounts into the millions, and I have some clients that have their accounts that are below $25,000. So this is something that I have to be aware of as an option trader when I'm trading for clients. Now, what makes this come to mind right now is twofold. Number one, a client actually got a mistaken day trade violation from TD Ameritrade the other day. But TD was awesome about it. No matter where you go, you're going to have mistakes happen, and they dealt with it, and it turned out to be nothing, and it was no big deal. But still, it kind of made me refresh my brain on this a little bit. And the second reason that this is coming to mind for me is because of the fact that I just put on a trade earlier this morning. And if I were to get out, because the markets move a lot during the day now, typically I wait till the afternoon to do trading, but I'm just not going to be able to do it today. But with that, if I need to get out of this trade in the same day, then I'm going to be, some of my clients that are below the $25,000 mark could be flagged as pattern day traders. Now, what's the disadvantage of being flagged as a pattern day trader? Well, if you don't have $25,000 in your account, you're going to be frozen until you do. So that can be a problem. But if you do have the $25,000 in your account, it's really not going to hurt you in any way. But for those clients that don't, this is where you have to be mindful of it. So what on earth can I do to get around it? Well, 2 things. Number one, you can just trade futures and futures options because those rules don't exist there. But number 2, the second way with which to get around a day trade is our good old friend, the box spread. So let's say, for example, that I were to sell a put spread, and my typical form of risk management would be to have a line in the sand to just get out of the put spread at a market order when it touches a certain price. The underlying touches a certain price. And that's very common for me because I trade SPY. I'm comfortable with market orders, and the spreads are I might get screwed out of a penny, maybe, but quite honestly, in many years of trading SPY options, doing market orders like this, I've never had any problem with it. So with that, that's typically how I like to do it. However, because I put the trade on today and we still have another 2 hours or so of trading left in the trading day, if I were to get out of it right now because the market were to move, then for some of my clients, it could count against them as a day trade. Now, if it's like a one lot, I know I'm not going to be doing anything different for the next few days, then I usually just do it anyway. And so long as there's not 4 of them in a 5-day period, it doesn't really matter. But in this case, because it's a spread, it could add up. And if I end up making an adjustment tomorrow or whatever the case may be, then it's a problem. So what I'm doing right now is on the short put spread I have an order in place contingent upon the market going below a certain point that I am going to actually sell a call spread. Now, how does this work? Let's say XYZ stock is at 50 and I sold the 45.40 put spread. If all of a sudden, let's say that my line in the sand is 46, that's when I want to get out. Well, I can't get out because it would be a day trade, let's say, if it goes against me. So what I can do then is I can do what's called a box spread, and I can create a synthetic equivalent with calls to what the opposite of this short put spread is. So what I then do is I sell a 40 call and buy a 45 call. And what that does is that creates a bear call spread to counteract with the bull put spread. Now, in reality, this is a giant pain in the butt to me if it ever happens, but it's a greater pain in the butt to deal with day trading violations or things like that should it ever occur. So with this, if you ever run into this situation and you have an account less than $25,000 and you're concerned and you don't want to get flagged as a pattern day trader, then this is an alternative of something that you can do to protect yourself. You can do it as a contingency. You can do it just if you're at your computer. And of course, you can do the opposite of it with put spreads if you're short a call spread as well. So the box spread is something to where I think the last time I used this, it's probably 4 or 5 years ago, but occasionally it comes up, and it's a good tool to have in your toolbox in case you run into a situation like this. And that is my strategy block for the first time in August.
There you go. Well said, sir. Now it's time for us to keep on rolling into our final segment. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. Let's see what we're going to be keeping an eye on for the rest of this week until we can gather here together on Thursday for a little bit more OB. Obviously, there'll be more shows on the network in between now and then. For this August panel, we're not gathering back together until Thursday. Let's start with the greasiest of meatballs. Mr. Meatballs, sir, what are you keeping an eye on for the rest of this week until Thursday, sir?
I'm watching earnings. I'm watching, what's going to happen with Apple and with Amazon. And, what happens to Google, I think, is a really interesting case study because they were, I would argue, like the lone tech company that really, truly disappointed. Do they get moved out of kind of the FANG group and, start drifting lower? What is going to happen with that name? Because we saw great earnings out of Facebook, Apple, Amazon blew higher. Microsoft had good earnings. It sold off on them, but Microsoft had good earnings. Google was kind of a disappointment. So I'm really interested in what happens to dollar allocations with the conjoined Google twins.
Ah, yes, the conjoined twins that are Google and Alphabet. I'm not sure they're probably going to be revisiting that for themselves going forward as well. Mr. Uncle Mike, you just talked about how you're keeping an eye on box spreads. What else is on your radar until Thursday, sir?
Yeah, just watching what we talked about earlier from the standpoint of wanting to see if the unemployment benefits are continued, if we're getting another stimulus. or seeing what we're doing with that. I think that's actually more important right now from a market perspective than any COVID news, because we've proven that with the government just greasing the wheels of the economy, even if we stay home, we can still do okay as the stock market. So long as the government and the Fed keep printing more money, then as a market participant, it's really, I think it'll be good. But if they don't, even though it would probably be better for our country, in my opinion, might not be so good for the country.
All right, listeners, that music come to the end of at least this show. Don't worry if you need more in your ear holes, you need more in your lives today. We got you covered. We'll be back in exactly an hour and 3 minutes to be precise, with the crypto rundown. Going to break down some cool stuff. Got the folks from Genesis joining us there to talk about all their latest in terms of analytics. A lot of stuff lighting it up on Deribit. Bitcoin's been moving. The options have been moving. ETH options have been lighting it up. The vol, the volume, the skew, all that goodness, unusual activity. A lot of it going on out there. And even if you're not a big crypto head, just interesting to see what's going on from that perspective. Stay tuned for that. We'll be back in exactly an hour with that. In the meantime, we'll put some fun stuff there in the live stream for you. Maybe some recent broadcasts, vol views, other fun stuff. Get you up to speed what we've been talking about of late on the network. But before we go, let's go back around the horn. Let's check in with each of our cohorts. Let's start with the greasiest of Austinites, Mr. Mark Sebastian. Mr. Meatball Surf, I'm intrigued. I want to get someone to hold my hand, maybe teach me a little bit about what's going on in this market. Where should I go? What should I do, sir?
Yeah, go to optionpit.com and make sure you're subscribing to our newsletters and everything that we do, because we put out a lot of content every day, and we want to help you and teach you what we're doing.
There you go. Optionpit.com is the place to go. You know it by now. Kick the tires and light the fires. Maybe someday they'll bring back that cool video guy that I miss so much from the early days of Option Pits. All right. And also, Mr. Uncle Mike Surf, I want someone to teach me about box spreads to avoid these pattern day trading, or perhaps to do it for me. Where should I go? What should I do?
Hey, go to stcharleswealth.com for more information. Feel free to contact me in any way you see on the website. Would love to have conversations on box spreads and investing in general.
And investing in general. The man does it all. stcharleswealth.com is the place to go. And on behalf of the greasiest of meatballs and the uncleist of Mikes, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, sending in questions. We'll get to more of them. Don't worry, on the Thursday show, probably smatter some into other shows throughout the week as well. There's so many questions coming in, not just for this show, but for every show we do. Keep them coming. We'd love to hear from you. And we'll see you back here in about exactly an hour for the Crypto Rundown. Then throughout the week for Options Boot Camp and OPR and all sorts of other good stuff. And then back again on Thursday for more of the Option.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.